Good evening, ladies and gentlemen. This is Clueless Trading Frank. It's approximately 8:12 p.m. on May 1st, 2018. This is a quick 15-minute video cast on today's market action. I'm going to be trying to do a lot more of these. Um, Very important that all members, free trial subscribers, anyone who's listening to this on the free Clueless Trading YouTube channel, um, subscribe and follow to the Clueless Trading Instagram, the Facebook, the LinkedIn, and Pinterest. We are on. We are finally getting on board with the social media aspect of marketing. One of our biggest deficiencies has been that we haven't got the word out. We are a very exclusive, as you all know, um, powerful trading service, but the lost masses out there have no idea what we do out here. So anyway, please tell all your friends and yourselves, very, very importantly, and I do request that very sincerely, go ahead and follow Clueless A Trading Instagram, Facebook, LinkedIn, Pinterest, um, and of course subscribe to the Google YouTube channel that most of you are subscribed to right now. Okay, on that note, full disclosure, this is purely for financial education and not for any solicitation or advice. And let me walk through a barrage of charts right now, so you guys know what we did. And many of you, I'm sure, participated in them. And congratulations. And we'll move on. This is not a market forecast webinar or anything like that. It's purely about charts, tactical charts. Okay. First of all, let's look at the S&P 500. That's the basis of the chart. And you're seeing here a daily chart of what's going on. And regardless of all the noise, which we call volatility, structured volatility, because it's all within ranges, this is what's going on in the overall market. So here we are, and what we did today was extremely powerful. We tested the gap fill here, just the way we did back on the 25th, right here. So we tested almost a lower gap fill, didn't quite get there, which is a positive sign, which almost tested the downtrend line. You can see the downtrend line here, the first one that we broke out of on the 25th of April. That was just last week. And then we had a powerful rally. We had a pullback. This is still, as of tonight, looking like a cup and handle. The handle would have broken pretty hard, as all my charts show all the inflection levels. If we had broken below the gap, in which case we would be testing the 2578 level on the E-minis, but the handle didn't do that. The handle held its ground, and at this point, there is a fair shot. It's a fair shot that we break out of the handle and test another major resistance, what we call R1, at around 2700. Before that, we're going to at least have to go break even for the year. That's at 2681.12. That's what the magenta line is. That's what 2018 started, right there. So that's going to be the first level of resistance. That is going to be R1, as in resistance 1. Major resistance 1. What happens after that? We'll see what the reaction of the markets are. Remember, we're tactical traders. Even though we're doing forecasting, it's not based on a hope or emotional basis. It's based on how the machines are moving in between levels. So at that point, if we get rejected and we come down here, well, we're going to do the intraday short like we did today for a good close to 100% on the SPX shorts. And then we'll see whether or not and that was 100% was basically from here to here, and then the reversal happened. And then if we hit that level in the next 48 hours or 24 hours, because we have a big Fed meeting tomorrow, announcement of rate hikes and guidance and all that stuff from the FOMC, Federal Open Market Committee. So if we hit that on the first leg of the move, remember the Fed is a three-wave movement on the market. Whatever the wave one is, up or down, is what wave three is. So if wave one is up, wave two is going to be down, and wave three is going to be up. Whether or not it's going to go surpass wave one, we don't know. And all that happens after 2 p.m. Wednesday. Of course, I'll be alerting you guys and putting out the pre-alerts and stuff like that. But be careful. It's going to be a very volatile day, just like today, just like almost every other day. And we'll see what happens. So if this happens, then this gap should hold. If it does hold, then we will move forward with a lot of force and hit a major downtrend line that we hit on the 20th of April, right there. And we'll see. Now, these things are extremely critical because they determine all your trades overall. So that's the reason why I'm explaining all this stuff. If this downtrend line is taken out, let's say some great China news because Wilbur Ross and all the Commerce Secretary, our Commerce Secretary Wilbur Ross is there, and then the U.S. delegation is there, economic team, and they cut some sort of minor deal with the Chinese on the trade tariffs and stuff, then we have a fair shot to hit a major gap fill at around 27.51. That's a lot of money. That's a lot of money on SPY and SPX calls. In the meantime, this is the gap. If we break this gap, that's a lot of money too on the downside, back towards 2600, and on a technical basis, 2578 on the E-minis or the ESF. That's roughly about 2582 or so on the SPX. That's it. So now we go. So now you know the roadmap. What's going to happen? What's not going to happen? Because no trader is God. Tactical traders respect what's happening on the charts, and they move forward with that. And of course, there is some gut intuition of what might happen, and all that is read in between experience of being a trader. I've been a trader for a long time. Not that long, but long enough to know what losing money is all about and the joys of making money is all about. Most people know the pains of losing money. They don't know the joys of making money. So, gotta get there, right? You gotta be in it to win it. So, the stochastics is one way of looking at it. The gut instincts of analyzing the news that's coming out, all that. And then we decide what we need to do. In the meantime, we follow the charts. Done. Let's move on. The second chart that I'm going to show you is something that is a very complex and advanced technical pattern called the Gartley pattern. I have to give credit to Suri Notes. He's you can follow him on StockTwits. Suri Notes, one of the most one of the best technical traders out there. He's written books on technical trading, and trust me, I'm pretty much clueless and pretty dumb. So I follow my own thing. I use the basic tenets. I learn very quickly, but I am not a rocket scientist when it comes to technical analysis. So saying all that, I took one step forward and I created the Gartley pattern today. And I even showed on my charts today a sample of the Gartley pattern. Well, whoever Mr. Gartley was worked out very well, because this is what happened. And that is good for more than a double on your money on the SPY and SPX calls. And not to mention all the other trades that we did. So this is the Gartley pattern. First I drew a falling wedge. That's this line. And then I started drawing these lines and it started to look like a Gartley. Now, why do I know the Gartley? Because in my advanced coaching sessions, the first thing that I do with the newest with a new student is go through basic chart patterns, and I do use Surinotes because it's a public website. And I will tell you that Surinotes, I forget the gentleman's full name, is absolutely brilliant. So, saying all that, we are looking at this is what we're looking at right now. So that's the Gartley pattern. The sequence of the Gartley pattern has been put out on the stock twist chart. This red candle that you see developing right now, futures are falling about 5.5 points, and that must be some sort of international news that's coming out. Whichever the case, this is the roadmap. Let's look through multiple charts out there. We saw the daily, the reversal hammer, similar to what we saw on May 26th. This is the SPYs. You can see what's going on, but now we're going to get into a whole bunch of charts here. The SPYs right there. Very, very important. Not much to explain because you can see it yourself. Here's your uptrend line from the early part of April. To be exact, the big climactic low, 2nd of April. Do a downtrend line, uptrend line from here, which connected with the 25th of April. This is exactly where we bounced off. You see that the reversal hammer. These things are big money for traders, and these are billions of dollars for the market. We are heading towards trying to recapture the magenta line here. That's the 150-day moving average. The blue line here, which is the 20-day moving average. The 50-day moving average all the way up to 268.23. It is going to test the 50-day moving average. Whether we fail or not at that big downtrend line, which is exactly at the 50-day moving average, we don't know. So even if we get traded like we did, as we're doing up here, and even if it fails, you just made yourself 250% on the SPX SPY calls just from here to here. Remember, we're tactical long short. Market doesn't have to be in a huge bull run. Markets are not linear. Markets are algorithmic. That means they are going to go like this. The markets are still in a primary uptrend on the monthly and the weekly. On the daily, you can clearly see the markets are extremely volatile because this pattern is not a straight line pattern. So whether we get here or not, which I think we probably have a good shot to get to, it's not going to happen in a straight line, as you can clearly see. It's going to be like that. And once it hits that, you're going to see big selling. Once it hits this, you're going to see very big selling. That's why we have the big supply points or red dots in the picture. Okay, next chart, because I got to keep within the time frame that I have been allocated by my new digital marketing director. So let's look at a couple of things here. First of all, Shutterfly earnings winner, huge. 81 to 90, the calls are going to go berserk. As I always say about earnings, it's a 50-50 gamble, but you can always buy one contract. Okay? I do sometimes. I do one contract of like 10 different things. So let's say you have one contract in 10 different things. You want to put whatever your allocation is. All right? And I buy in the money just to be on the safe side. You know I'm an aggressive trader. I play volatility. Comes to earning, I will pay up a little bit more to be in the money or what we call ITM, so that even if it goes down, I still have time to cost average and wait for the reflex bounce. In most cases, that's exactly what happens. In this case, it just went straight up. So what I'm going to do first thing in the morning, sell. Next one. And that's probably going to be 200% on the money. Apple. What am I going to say about Apple? Apple went berserk. Did I know Apple was going to go nuts? No, I didn't. Did I think Apple was going to go do very well? Yes, because I showed them my chart since last Friday, Thursday and Friday, which I'm going to show you at the end of this quick video. Everybody and the mothers are negative on Apple. There's enough fundamental reason I can give you why Apple was going to go higher. For one reason, I use my Apple iPhone more. I got an iPad. Remember, I was an old BlackBerry guy, okay? I switched to Apple 3 years ago, iPhone, much later than many of you did. I love it. Now I'm still learning it. The iPhone 8 Plus that I use is brilliant. I can't wait for Apple to bring a 10-inch screen out or a Apple phablet. And you know what I'm going to say? Anybody of you listening to this using a Samsung, do yourself a patriotic favor or give back your US passport. Well, I don't want to go that hard. Dump the Samdung or Samsung and buy an iPhone. Buy American. It's a much better phone. It's got a universe of, it's a whole different universe. Samsung does not have the type of apps that Apple has. You are not part of the community. Dump your Samsung. Okay, let's move on. So look at Apple. The shorts are freaking. The market's going to be like, the NASDAQ is up 105 points after hours. And this is beautiful. The calls were around $3, $4. They're probably going to be at 8 to 9. In the money, 165, 170s. Couldn't buy one. End of story. Baidu. Another one, huge intraday reversal, huge earnings winner. That was earnings. Kind of moved sideways. I'm sorry, earnings was last, when was it? It was earlier. Earnings was down here somewhere. Yeah. Went 260. Whoa. Pulled back, moved sideways, and then intraday just went like that. Great trade. Options on Baidu. I think I have the chart put out there. Options on Baidu. Let's see. There we go. 1 second, please. So here's the options on Baidu, okay? And let me clean out the chart. So as a tactical trader, I'm always looking for opportunities to make some quick money. Because unlike maybe some of you who are multi-billionaires, I'm not. I'm just a simple guy who's trying to make some money to pay the bills. I am. So if that's what you are, that's what capitalism is all about. This was Tuesday, today, and I said bye Baidu on the pullback. I'm not even mentioning the earnings, which were up $17. So here was Tuesday, 9:45. So you could bought the calls at around 87 cents, 90 cents. They went to 190. That's 100% on your money. I'm not complaining. And I did alert it. End of story. Whether you acted or not, it's not my problem. I wish you did. Let's take a look at the next one, which is one of my favorites, US Steel. US Steel yesterday was a huge winner, and today was a great buying opportunity. So US Steel basically yesterday went from, let me see. These are the options. And these are the cheapest lottos that you can deal with. Okay? So you buy a bunch of them. It's not going to kill you. It's not going to put you on the street. It's not going to take away money from your mortgage or your kids' tuition, which I have a lot, even though I have one son, or your alimony, or your divorce settlement, if your wife dumped you or whatever. Big stuff. So yesterday, this was, you're looking at Monday, this baby went from 16 cents. You can look at that right here, 16 cents. It went to 50 cents. Whoa, do the math. That's 300% plus. That means your profits were 200% plus from the 16-cent level, which I alerted on Monday. The same thing happened on Friday, by the way. That's 200% in your pocket. So if you put, let's say, $1,000, you would have taken out 3,000. That means it's a $2,000 profit. P plus, let's call it, right? Or if you put $100, you took out $300. So if you're looking to make a couple of $100 a day, which can build up to a lot, okay, 100 to 300. Imagine you made $200 a day. You would be making $1,000 a week, which would translate into roughly $4,000 a month. And over 12 months, that would be $48,000 that you would have extra in between your active income that you do in your own business. Sounds very simple, but it's very doable. And imagine if you're a real tactical trader, how much more you could make. And if you put that down to $100, then you would be making $480 a week. I'm sorry, $100, you're making $400 a week. And or $500 a week, that would almost be $6,000 a year. Gotta think simple, guys. Okay, so that's US Steel. Now, what did US Steel do today? Went from 12 cents to 25 cents. So just today alone, as I told people to keep on buying this, 12 cents went to 23 cents, is almost 90% plus. What was the last time you actually made 90% plus on lottos? And it's going a lot higher, in my opinion. Look at my charts. I'm going to spend time on this showing the same chart. So that's US Steel. Let's take a look at WIN. So here's WIN, which has been a terrific swing trade winner. We had a free trial member from England who actually works for Microsoft. I'm sure a terrific gentleman. And he says, I can't figure out which one's your intraday or swing trades. So I just answered him very simply. I write the word swing on it. And he's supposedly an English gentleman, or maybe he's a Yankee, an American, I don't know. But if you read English, you know what my posts are saying. I said I write swing on it. And on top of that, he didn't quite get my charts. And for all free trial members who are going to listen to this, remember, I always spend at least 35 to 45 minutes on the phone of my own personal time explaining to everybody right at the onset when they join, giving them all the helpful guidelines that they need to do. They want to take that next step forward, they got to review my instructional videos on YouTube on the new member introductory videos, and they need to sign up for the advanced coaching sessions if they want to get to that next level of understanding the extremely difficult, and I say difficult and volatile markets that we are navigating very successfully. And even the biggest of the professionals are capitulating. So here's Win, just to show you what it did today. So here's Win on Thursday from last week. I said buy Win, buy Win. I say it almost every other day because the longer term charts are showing higher. From a $1.90, it went to $7.60. Let's do the math on my $2 Walmart calculator. Okay, $7.60, $1.90. It's close to 300% on your money since just last Thursday. And yes, it pulled back along the way and I said buy. Yes, it pulled a little bit back. I said buy. Or you could just sell here and then buy. From a $1.96. So if somebody put 1,900 bucks, let's for example, they put 10 calls. Okay, 10 calls of Win. They would be taking out $7,600. Believe me, that trader would be very passionate about trading my tactical charts. End of story. Let's move on. Let's see. WinX Alta. Had to show Alta. Alta Beauty. One of our best swing trade winners hit exactly what I said it was going to hit, which was around 250, went even above that. So Alta, just to show you from last week, forget about like from weeks ago, was at 1 or less than 1, went to 11. That's 1,000% on your money. All you had to do was stick to the tactical swing charts. And by the way, it says swing. Just to remind that fine Microsoft finance gentleman from England, I'm sure he's a fine guy, who came out with the stupidest comment saying he doesn't know which one's a swing or an intraday. Because he never bothered to even speak to me. And all I do is help when I speak. So if somebody put in $1,000 here and stuck to the swing charts, they would be taking out $11,500. And you tell me if that trader, and by the way, traders, even including me, we don't hold everything all the way. We sell as we go along the way. But this is the lifetime of my trade. And it took from Tuesday, 3 weeks, 1,000% plus. So they made themselves $10,500 on a $1,000 investment. Do I need to say anything more? Have a great evening. God bless you all. Trade tactical. Forget the emotional garbage. It's tough, I know. This is not an easy market, but boy, can I just say one thing. The hard work that I do in the background and every single one of my precision charts, up or down, do come to fruition 70 to 90% of the time. You don't have to believe me. You don't have to idolize me. I'm just a human. You idolize God. Okay? All you got to do is be smart and do the right thing. Buy one contract of each of my trade alerts and see where it lands up. Buy the basket, not lump into one. See you guys all tomorrow. Good night.